All right, Nilesh Shah joins us. Nilesh Shah, good morning. Thank you for joining us.
Good morning, Nikunj. Good morning. Very good morning.
अरे आवाज में गर्मी होना चाहिए आज तो.
पोर्टफोलियो में गर्मी होना चाहिए. But
Okay.
surely, no, I think this is a great day, Nikunj. I think this again is an important, I mean, today's day will go down in history as an important milestone for India's long-term bull market. And I think it's honestly the best thing that the market had wanted. And that's what we have got. So I think honestly, it's a great day and the start of the next leg of this journey.
So, Nilesh, what changes in the short term, what changes in the medium term, what changes in the long term according to you?
So clearly, I think what changes is basically a bigger boost to manufacturing. I think that's clearly been the focus of this government, and it will continue to be a renewed and a more aggressive focus. That's really one big place where a lot of reforms can yet happen, policy changes can yet happen, and that's essentially going to be India's silver bullet to solve many of our challenges of the past. So I think that's one big thing. Second, I think is the global investors. I think it's going to be impossible for them now to ignore India, not just as emerging market allocation, but essentially to be a mainstream market where they make substantially higher allocations, because obviously they have been apprehensive about continuity of policy for the next 5 years. Here now what you have is essentially a continuity, stability, and maybe a turbocharged policy calendar for the next 5 years. And I think that's what they basically would be looking forward to. So I think that's the second big change, that so far for the last 5 years, last 10 years, this bull market has seen massive participation from our fellow retail investors. What you're now going to see essentially is the world's investors now come down and come into India in a much significant way. So I probably think these are the two big changes that I see from here onwards.
Okay, now let's talk about the themes. Modi first term saw a renewed focus on digital India, focus on financial inclusion, and schemes like Jan Dhan, which in a sense are now acting as a bedrock for India's growth. Similarly, Modi 2.0 saw focus on Atmanirbhar, manufacturing, PLI schemes. What to your mind are going to be the new themes, ideas which one should look at? Because if you bought into defense stocks in Modi 1, you did not make money. But if you bought into defense stocks and railway stocks in Modi 2.0, that's the time you really hit the jackpot. What should one buy, assuming that the third term could also focus on new areas of growth?
So, Nikunj, it's very likely that these very sectors are going to basically get a fresh impetus. You're right that yes, in term one, these pockets didn't yield returns, but in the second term, especially post-COVID, we've seen massive returns, and I probably think that's only the start. Be it defense, be it space, be it many of the other areas. A lot of focus so far has been on indigenization. A lot of focus has been so far on import substitution. I think what's going to basically change and become significantly material is essentially that these very sectors, these very companies don't basically just look at India as a market, don't just play on indigenization and import substitution, but essentially look at the world as the market. So far, no country in the world has essentially been able to grow without industrialization and has not been able to grow without exports. And that's, I think, the journey which we are about to embark on. So that's one big area. The second big area is, of course, for the last two terms, privatization has not happened. I clearly believe that now this is the term where I think divestment and privatization will happen, and you're going to see many more state-owned enterprises come in and go public, do IPOs. We've seen the success of many of these public sector IPOs in recent times and the returns that they have given. I think the confidence is supreme in this space now. So from a complete kind of a fear or a hate to essentially love or greed, we've seen that change. And I think in that process, as part of improved governance, you're going to see many more state-owned undertakings go public and the IPO. So I think that this term you're going to see these kind of changes materialize.
Well, there's a big move on India VIX as well. It's reduced now to 2131, and I guess that is also one of the good signs. But Nilesh, hi, morning. Picture perfect as it may be, do you think it will also come in the short term at least with a serious bout of profit taking? Because, most went fully invested into this market and they would be tempted to take some money off the table. How is it that one should position ourselves for that? And do you think that's prudent at all to take some money off the table? Because, this is a big move indeed. And we all know about the valuations which have run up significantly.
So probably, Aisha, short-term players will indulge in profit booking. I mean, as they say that buy on rumor, sell on news. So today is essentially the day when the markets are reflecting the exit polls. Tomorrow is 24 hours from now. We will essentially have visible trends in terms of which way the verdict is flowing. I don't think anybody has doubts about which way this verdict is going. But it's very likely that you might see some profit booking happen because that's essentially the kind of nature of business in which short-term players are in. But long-term players, I still think they will continue to kind of come in. And clearly, when you take a 3 to 5 year perspective, markets essentially are not expensive. Markets are reasonable. There will be pockets of where valuations are way more attractive. And that's where money will flow in. So my view is that the SIP juggernaut will continue to roll. That will probably, in fact, even grow bigger and bigger. We are only at 20,000 crores. Who knows? In maybe a few years from now, we could be looking at numbers like 50,000 crores or maybe 1 lakh crore. Those are the kind of numbers which may just kind of flow in. Domestic capital, I still think, is yet underinvested in terms of the large HNI pockets. I think a lot of that capital will flow in and that will get deployed. So my view is long-term investors, I don't think are going to indulge in any kind of profit booking. They will have a 3 to 5 year view, and it makes sense to have that kind of a view. Whereas, yes, the short-term players, people who indulge in F&O derivatives, who are traders, they will probably indulge in profit booking, but I think all of that will get absorbed.
So where is it, Nilesh, that one should put fresh money to work?
I still believe that the EMI space, which is energy manufacturing and infrastructure, will remain the bedrock or the pillar of this bull market. That will continue to be the big area. The second essentially is basically the long-term compounders witnessing linear growth, areas in like financials or the premium consumer side. I think these are some really attractive opportunities which will be there. So I think lots really to pick and choose from, a huge set of opportunities. The canvas is only broadening, it's expanding. And so, yes, I clearly think that there are a lot many more compelling and attractive opportunities.
India has always been a multi-bagger market, right? And more than large caps, those kind of returns have been generated by small and mid caps. And we've seen that, as a proof in the last 2 years work out magically. Would you say it makes sense to make any sort of distinction based on market capitalization right now? Or would you say just go with the flows, go with where the trend is benefiting, like you said, EMI and other themes, and it doesn't matter whether it's a large cap, small or mid cap?
It doesn't matter. I think the key in this market is to remain bottom up, be focused on fundamentals, have a very stringent research process, and keep seeking value. I think that's essentially the bottom line. It doesn't matter whether an investment opportunity is large cap or mid cap or small cap. It just doesn't matter. It just depends upon the capital that you have and the capital that you need to put to work. But otherwise, beyond that, I think you have to essentially be focused on the long-term potential of a business, ensure that it remains capital efficient, and it has all the tailwinds going for it. I think if some of these boxes get ticked, it ends up being a good investment or a great investment, and that's what essentially the focus should be.
Nilesh, so would you change the way you've invested? Because when you have such a strong mandate, a lot will change. Focus on rural India could come back. Focus on, for example, new schemes could come back. Would you be looking at orienting your portfolio in any meaningful manner?
Yes, Nipun. So basically, continue to essentially the focus, I believe, for this for the government in the third term is going to be significantly on farms and on factories. These are essentially the two big areas where there's going to be huge amount of focus. Factories, a lot has been done, a lot more needs to be done, and we've discussed some of those sectors. I think farms again is one area where a lot can potentially happen, and that's one area that we need to be focused on. And when I talk of farms, I'm more referring to the rural side, the rural opportunity. And these are some of the areas that we need to be focused on. It may not necessarily be rurals. It can essentially be companies which are leveraged to maybe the relatively underdeveloped parts of India. It could essentially be businesses which are leveraged to Bharat. It could be businesses which are leveraged to the kind of urbanization wave that is sweeping the smaller towns of India. It could essentially be the kind of growth and development which is happening on the eastern side of India, or the north and the northeastern side of India. There are plenty of businesses out there which I think can throw up very, very interesting investment opportunities.
Nilesh, in this market uptick, and typically I'm going to put this data point out here, Nilesh, and I think this is the most important data point here, because there is a lot of there is a lot of participation by SIP investors and by retail investors post-COVID. So historically, if you track 2014 and 2019 elections, which me, Nilesh, Aisha and all of us have done, markets loved the 2014 mandate. BJP was voted back to power. They applauded the 2019 mandate, which is that BJP was voted back for to power again. And if the same happens tomorrow, what could be the upside? 2014, markets loved the mandate, but 10 days or 15 days after that, the market reaction was nothing great. Similarly, in 2019, markets loved the mandate, but the market reaction was not great. So Nilesh, that's my point. That even if markets may say, okay, we like the mandate, we love the mandate, history has taught us that you should always buy the news and sell you always buy the rumor and sell the news.
Yes, that's generally been true, that when you kind of buy the rumors and sell the news, that's generally been true. And it's always hard to really kind of make a guess on this which way it is. So I honestly don't know 3 months or 6 months from now how things will basically shape up. All that I would basically look forward to essentially are two things. One is essentially the budget in July. That will essentially be the starting point or the launch pad for economic reforms and policy changes. The government has already said that the first 100 days are going to be critical. So my view is that a lot that we will see in the next 1 year or 2 years will essentially depend on what gets announced in the next maybe 30 days, 60 days, or the next 100 days. So that essentially will be the icing on the cake. But in the meantime, the core part of the cake, which essentially is going to be earnings, that will determine. And our view is that we are set for a 15 to 20% earnings growth for the markets as an aggregate basis. And so to that extent, I wouldn't be surprised a year from now, the market still ends up giving you double-digit returns and returns which are in the teens, which would just be in line with the earnings. In addition to that, if we have some major policy changes, a huge round of economic reforms coming in, that would essentially be the set of additional returns that could come in. But otherwise, my view is markets are going to basically move in sync with earnings for the next 1 year.
Absolutely. And Nilesh, given how deep this market has been and, of course, buoyant, it's bound to move very quickly as well. I think another 2 days and this reaction of the election outcome will be done and digested with as well. The next event, like you also highlighted, is going to be the budget. What then is the market focusing in on? And is it only just taxation that we're hung up about?
No, that will essentially be a key part that the market is going to look at, and that itself could basically give a sigh of relief and trigger a rally. That if basically the taxes are not touched or not hiked, then I think that itself could basically be a huge sigh of relief for the markets, and at least the market will have a 12-month window essentially for any tax rate changes to happen. But I think in addition to that, I think areas like privatization, divestment, does the budget roll out a long list of companies which will go IPO, a further move on areas like labor, land acquisition. These are some of the challenges which businesses continue to face. And are there going to be essentially any changes or tweaks here? Expanding the PLI kind of policy, that itself, I think, is, and expanding it to more sectors. I think these are some of the things that basically the budget might just kind of focus on to give that booster dose to the markets.
Yeah, absolutely. And what a booster dose coming in. Nilesh, thank you so much for taking the time out and speaking with us. It's really a historic day. Can't describe it any better. We're still pinching ourselves. This 2.5% uptick that we continue to sit on.
If you like this video, then like, share and subscribe to ET Now.